Our viewers, welcome again to the Entrepreneur TV show. My name is Lucy Jeffrey. I'm very happy to be able to bring you professionals who have been sharing great information that has helped our viewers to understand a few things. So today I have a great guest that I didn't want him to speak to us about what's happening in the financial industry. So I have Jeff Ruiz, and he's going to speak to us right away about what's happening in the financial industry. And let me welcome him.
Thank you, Lucy. Lovely to be here.
Hi, Jeff. Welcome to the show.
Thank you. Wonderful
Awesome.
to be here.
Awesome. So our viewers are going to want to know you. Jeff is a licensed insolvency trustee, but has more designations. But please tell us what's unique about your profession and really just quick introduction about yourself so our viewers can get to know you.
Absolutely. Thank you, Lucy. So, my name's Jeff Lewis. I've been in Canada. I can tell I'm probably from the UK. I've been in Canada for about 20 years. My profession is, legacy profession is an accountant, a chartered accountant in Canada, and back in the UK as what we call an ACCA. We're now all known as CPAs. And back in the last recession, 2008, I decided to specialize into the world of insolvency. So helping individuals and businesses to help themselves with their debt and to become debt free and restructure their finances.
Thank you so much. So what made you then, Jeff? And by the way, thank you to hear that you've been in Canada for 20 years. I've been in
Thank
Canada for
you.
17 years. So thank you to hear that you came from the UK. So what made you then become a licensed insolvency trustee after being an
Well,
accountant?
Lucy, I think these are niche professions, and I think I always tell people that the job finds you; you don't find the job. So, I've been in practice for almost 40 years, and serving the public with tax and audit and business advice and so on. And it comes to a point where you people find you and ask you to do things. And I was working for one of the very big firms in Canada, with big accounting firms. And I got asked to go on what we call a receivership, where it's where the secured creditor sends in a trustee to help them to recover their assets that they're secured against with their loan. And then I got involved in it from that. So I spent years doing corporate work, but then I found myself in a space where I'm actually helping individuals as well. And for me, as I grew older, what I decided was what I loved giving back to people and helping people, and and imparting my knowledge and making people's lives better. And this job allows me to do that every day by just changing their lives and helping them to manage their finances when they think they have nowhere else to turn. And I can help them to get rid of their debt and get back on track financially. It's pretty phenomenal. So the job finds you. When I look at what I do out of work in my spare time, a lot of volunteering, a lot of giving back to the community, and it's really, I think it's really, it's a special person that becomes a trustee, because you really have to empathize with people and want to help them.
Thank you, Jeff, for doing that. And let me ask you, I want to ask you about your designations. You have quite a number of designations there, and I want our viewers to understand all your qualifications and how they help you in your current responsibilities.
Absolutely. So, on the CPA CA, and I came to Canada, I re-qualified as a Canadian chartered accountant. And then some time ago, all the professional bodies merged, all the accountants merged into one body, chartered professional accountants. So we're now known as CPAs. So new accountants are now just CPAs, and legacy accountants are CPA CAs, CPA CGAs, and so on. FCCA is the first designation I got. That was in England. That was it stands for the Association of Chartered Certified Accountants. So when I was 20, I started working in an accounting office and spent 5 years studying to become an accountant. Qualified at 25, and then at 30 they made me a fellow. So I've been a fellow for a fair number of years now. I'm very proud of that. That's I do help the body in Canada as well. It's an international accounting body. It's the largest in the world internationally. 250,000 members, 500,000 students in I think about 190 countries, I think. So it's quite phenomenal. The CIRP is stands for Canadian Insolvency Restructuring Professional. So CAIRP, our professional body, it regulates trustees basically. So you become a CIRP by going through was then a 5-year study program, and once you've done that, you then have to get the license to be a trustee, which is issued by the federal government, and you go to what's called an oral board, and they put you through a series of questions, and you do a presentation, and if you're successful, they grant you a license to be a licensed insolvency trustee. There's only around about 1,000 trustees in Canada. It's a very niche profession. So we're a fairly rare bunch, and we help anyone, individuals and corporations in Canada to with their finances become debt free.
Thank you. Thank you. And in your current role, you are very senior vice president and at Tyler Leibow. And so tell us then, life of an insolvency trustee. What's a day like? You wake up in the morning, you know you're going to welcome people who have debts and really struggling until the evening. All you're dealing with is people's problems. So what's a day like in your life of an insolvency trustee?
So every day is different, Lucy. Like no 2 days are the same when you're in a trustee in any, I guess, any professional environment really. But you know, our phone rings every single day, and there's people under the phone saying, "I need help. I'm in too much debt," or corporations saying that they're struggling, their business isn't going so well, their finances are bad. What can you do to help me? So you know, every day we're sitting down talking to people, directors, individuals, self-employed people, retirees, young families, and listening to their financial issues and find solutions for them that actually will get them back on track. So I almost tell people it's like being a social worker, really. That you're listening to people's problems, you're trying to find a solution, you're helping them, but then you have high technical skills because we're all highly qualified and experts in our field. And you know, really, it's a lovely thing to do because everyone. I say to people, how everyone gets to me for the same reason. They have too much debt or they're struggling financially, but their journey to get to me is absolutely unique to them. And you know, to listen to their journey and to try and find a way out of it for them when they think they had no hope is pretty phenomenal. You know, really, when I think about what I do every day, other than you know, we do a lot of technical stuff that we do, obviously, and a lot of number crunching, but you know, it's really education. That I'm educating people on what's available to them, on their options. Most people don't know which way to turn when they're in trouble. There's an expression, you can't see the wood from the trees. So you're focused on the detail, but you can't see the big picture, how you should really help yourself. And it's just educating people on the options available. And when I tell people what's available to them, what they can do, it's a life-changing discussion generally.
Thank you, Jeff. All our viewers watching today and those who watch this in the future are aware what's going on in Canada now. Very high mortgage rates. Tent cities are increasing. I hear there are more people going to the food banks. Rents have gone up. So what does that mean? The inflation and all that we are hearing, what does that mean? Does that mean that there are more individuals and more businesses seeking your services?
Yeah, absolutely. So, you know, the insolvency profession tends to go in cycles. You look at the economy. I always think an economy is going in sort of 7-8 year cycles. So you'll get a low of the economy, and then the economy will start to boom again, and then it will peak, and then it will crash, and so on. So I always see that happening every maybe 8 years. So the last recession we had was 2008, 2009, and then the amount of people filing an insolvency. So when we say insolvency, we mean for individuals, we're talking about a personal bankruptcy or what's commonly known now as a consumer proposal. And when we talk about businesses, we're talking about them restructuring their business through a proposal or closing the business and filing a bankruptcy. Or, like I said, receivership, where we'll work for the secured credit to help them to recover their money. So we saw a recession back in 2008, 2009, where we had obviously a property crash in the US, and insolvencies were peaking at that time. And then they started to come down after that. Once the economy starts to recover, they start to come down slowly. And then again, they reach a bottom, and it's almost like a hockey stick, and they'll start to recover again. So we saw a recovery really just before the pandemic happened. It will start insolvencies were starting to rise again in terms of number of filers across Canada. And then the recession hit, and of course it just it dipped enormously because nobody was worried about paying their debts. They were worried about putting food on the table. So what we see now is people have gone through the pandemic. They've gone through a period of obviously high increase in interest rates. Not, I guess, particularly high in terms of the value of the interest rate or the base rate. But we look at the number of raises and where it's come from and what it's ended up at. It's a big issue for people. And then we've got inflation. Obviously, we had high inflation. Food inflation is probably one of the all-time highs, and people are just struggling really to put food on the table. And the people that we see, people don't generally struggle and then next day go and find a trustee. You try and help yourself. You try and self-help, and you'll do that for maybe 1 or 2 years and really struggle to put things back where they should be. Maybe you sell some assets, or you'll try and get a second job, or you'll try and reduce your expenses. But if that's not possible and things are getting worse for you, then you'll see a trustee usually a couple of years after you start struggling. So when we look at the pandemic in 2020, and we're now in 2024, we've had interest rate rises, and obviously now we're just seeing the first decrease for the first time in a couple of years. Now we're busy. Now people are coming to our door saying, I can't do anymore. I'm in too much debt. I need help. And so we're seeing insolvencies starting to rise. And they're almost at a point now, I believe, that we're almost at the point where they were prior to the pandemic. So at a fairly high level. And we see them continuing to rise again as people struggle and they get their mortgage renewals, and things just don't get any better for them. They need to seek professional help. Across Canada, usually there's around about 150,000 people that file proposal bankruptcy generally annually as an average. And I haven't looked at the stats recently, but we're going to be at a fairly high number this year and probably to the next few years coming.
That's disappointing, but I'm happy you are there to help people, Jeff. Some of us, like me, I came from a country where I didn't know about insolvency and bankruptcy and all that. So let's even talk about the journey that people take before they come to see you, and especially even the immigrants, people like me who came from countries where they didn't know that if you have debt, there's a legal solution. So what's the journey that people follow before they get to you?
Yeah, the other thing to say, Lucy, is you talk about immigrants and Canada. Every country has an insolvency type of business, insolvency practitioners, but every country operates it differently. So Canada's quite unique because it's a separate qualification, a CIRP qualification, and the government issuing a license. Where I come from in England, generally the accountants will, look after people that are insolvent and need help. In the US, generally it's lawyers that help people. So we are unique here. And if we look at the worldwide statistics, Canada actually has a very high debt to income ratio, one of the probably highest in the G7 countries, I believe. So it is within our borders. So the journey people get to. So I've already said people don't go and see a trustee the day after they get into debt. And a lot of people think, well, the person who files bankruptcy has no assets, no income, they've got holes in their jeans where they're crawling down the road, and not quite true. That's the stereotypical image of a bankrupt. But the people now struggling are the people that live in houses, they've got a mortgage, they've got 2 cars on the driveway, they go on vacation. They're probably, people watching this, they're probably your neighbors, but they've just got in over their head, and not necessarily for their own fault, because let's say they took out a mortgage within the last 5 years, and it was a 5-year fixed mortgage, and they borrowed at maybe 1 or 2%, and we're now looking at 4 or 5%. Well, again, 4 or 5% is not a huge amount. My first mortgage in England was much higher than that, I remember, back in the day. But it's when you borrow at such a low rate and you borrow a large amount because property prices have been increasing, when you add a percentage increase to that high value of debt, that's a big change. So when you go from a 2% interest mortgage rate to a 4%, that's a 100% increase. And people's income don't go up 100%. So we see now people struggling and seeing a trustee. So you probably know someone that's struggling. I always say to people, here's my card. We're here to help people. And I say, well, I don't need a trustee. And I say, you probably don't. But You probably know someone that does. You probably got a cousin or a nephew or a niece, or you know, maybe even a parent, right? That just can't cope with the financial pressures that the last few years have put on people. So what causes people to get into debt? Well, obviously, anything, mortgage rates is one of them, but anything that causes your income to drop or your expenses to go up, or a combination of the two. And, you know, in terms of expenses, sometimes you have no control over your expenses. I mean, in terms of your mortgage, it's a fixed amount. And if you're stuck into a fixed mortgage, you're not going to be able to change that. Your income, maybe you can't change that either, unless you try and get a better job. But if you're in a job where you're earning what you should be earning, and you don't want to take a risk, then your income's going to be fairly static. So, you know, I always talk about being thrown a curveball. So maybe you have a car accident and then you can't work, and then you go on disability and your income drops, or you don't have any income at all. A divorce is a big one. You know, a life event that causes your income to drop. There are people, obviously, that we do get gamblers and we do get addictive behaviours. But it's not as common as you think. I mean, shopping is also an addictive behaviour. And, you know, I would think number one cause, to be honest, Lucy, is poor budgeting. You know, when I talk to people about doing a budget, and I say to people, do you do a budget? And they say, well, not really. And the amount of people who have never done a budget in their lives, but live day to day, you know, earning income and spending it, but spend everything they earn and don't plan for the future, and don't manage to save an amount for a rainy day, like a nest egg. Something happens, you're going to fall back and you're going to have to rely on credit. And then when that keeps going and you run out of credit, you have to go and see a trustee. So, you know, to summarize, everyone gets to me for the same reason. They have more debt than they can handle, but their journey is unique to them and always completely different.
So that's good to know then, Jeff. But there's one thing I know about bankruptcy. Although this is a legal process and approved by the government, it is associated with a lot of negativity and stigma. So what actually happens within bankruptcy, and why should people not feel, so negative about it?
Yeah, and there's typically been a lot of stigma around bankruptcy, and you know, I think people still have issues around that, and there's a lot of myths out there that people that aren't quite true. You know, bankruptcy is a legal process, and it's put in place by the federal government to help people get a fresh start. So when I first went to learn about being a trustee, you know, they said to me that the job of a trustee is to help unfortunate people rehabilitate. And there's two words in there: unfortunate and rehabilitate. So rehabilitation is key to what we do. More common now than filing a bankruptcy is to file what's called a proposal. And what we do is we'll take people's debt. When you file with a trustee, you get stay of proceedings in place. So the Federal Act protects you from your creditors, which means that once you file with a trustee, you can't be taken to court, you can't be sued. The creditors, people you owe money to, deal with us, the trustee, and then we talk to the debtor, the individual that is in debt. So we sit between you, if you like, and moderate the whole process. And you know, as I said, there is perhaps some stigma towards bankruptcy, but like I said, you probably know, everyone watching this presentation will probably have met someone that's filed and they've never told them, and they will never tell them, right? I mean, it is a public document. It does go through the Ontario court system, but by and large, most people would never find out because they really wouldn't know where to go and look, and they have to pay a fee and do a search. So more people now file a proposal in the bankruptcy. A bankruptcy is a very legal, strict procedure where you go through to get out of debt, and it will be anything from 9 to 36 months, depending on your income and how many months, how many times you filed a bankruptcy. Most people choose to file a proposal now, where we take their debt, we look at how much the creditors will get back in a bankruptcy. We have to make sure that that's covered as a parameter, and then we make an offer to their creditors, to essentially settle their debt at less than 100 cents on the dollar. And typical will pay between maybe 20 and 50 cents on the dollar, depending on their circumstances. Everyone's unique. But what's important is, Lucy, all the interest stops. And so that's a huge amount for people. A lot of people we see are just paying the interest on their debt, and they're never going to get out of debt because they can only afford to make the minimum payment and pay the interest. And when you look at the average interest on their credit card now at 20%, it's expensive. And if you've got a reasonable amount of debt on your credit card, most people we see have $20,000, $30,000 worth of credit card debt. You're talking about $4,000 to $6,000 a year. So, you know, maybe up to $500 a month on average of interest that you're paying out, and that's just dead money. So we'll take those payments, and turn that into a debt payment for you and get you out of debt, probably less than the interest you're paying in a much quicker period.
Thank you, Jeff. So you've given us a lot of information, and I totally appreciate that. So, but there are a lot of myths still associated with bankruptcy and consumer proposal and all that. People are worrying that their car is going to be taken away, their TV is going to be taken away. Can you help us to bust out the myths?
Yeah. So the law allows you to rehabilitate. So what happens is we look at person's assets, and there's a lot of exemptions for assets. So excuse me, yes, the question is, the most common question I get is, if I file bankruptcy, I'll lose my car. Absolutely not true at all. So you're allowed to keep a vehicle up to a certain limit. It's just over $7,000 in Ontario, and that's the value of the vehicle, of your car, less the amount of debt you have on it. So let's say you have a car worth $15,000 and you owe $10,000 on it. The vehicle is then worth $5,000, and that's covered by the exemption. Anything above that, it belongs to, you have to buy back from the trustee. But by and large, most people's asset vehicles are exempt. And if you have a loan on a vehicle and you're paying for a vehicle, that's secured debt. You're paying, they don't need, the people that lend you money to buy that vehicle don't ever use a trustee, because if you don't pay the debt back, they can come repossess the vehicle. So we deal with unsecured debt, so credit cards, lines of credit, loans, payday loans, income tax, that type of thing. Where you have secured creditors, which is perhaps a vehicle loan, that's separate. And I say to people, as long as you can maintain the payment on that car, on that vehicle, you can keep it with whether you file a bankruptcy or a proposal. And then if the vehicle value is less than $7,000, then there's no payment due to the trustee. So that's one myth. You can keep all of your personal assets, all of your clothing, all of your household furniture, all exempt, all allows you to rehabilitate. Some financial assets are exempt. You can keep RSP funds. I don't care how much the amount is. It's exempt unless you paid any amount in 12 months prior to filing. So again, that's a big misconception from people. You're going to lose your RSPs. The government wants to keep them because it helps you to retire. Equipment for business. You can keep equipment for business up to a certain level. So there's lots of exemptions you can keep. Our ESPs, unfortunately, are not exempt. That's classed as a savings account, and that has to be dealt with by the trustee. But there's ways around that, and we can work out ways for you to keep it by making small payments to the trustee. So lots of myths in terms of assets. The myth in terms of bankruptcy is, if I file a bankruptcy, I'm not going to be able to have a credit card for 7 years. Again, absolutely not true. A bankruptcy can be short as 9 months. The 7 years relates to how long that bankruptcy is notified to your credit, to anyone looking at your credit report. So it sits on your credit report from 7 years to the day you're discharged, and then it will fall off. That's the 7 years. But you can be out of debt in 9 months in a bankruptcy if you have low assets and income, and within a couple of years have a very good credit rating again. So it is really a good process to get yourself back on track and reset your finances.
Thank you, Jeff. So I wanted to talk about business owners, because I'm a business owner. I don't want to leave them out. So if you can dive into that a little bit more, what are the debts relating to businesses that are exempt or included?
Yeah, so a lot of business owners get into trouble with taxes because they've got to pay their suppliers, they have to pay their staff. If there's little money left in the pot, then income tax is something they're not going to pay in the business. And perhaps they don't pay their HST, their sales tax. Perhaps they don't pay their source deductions, their money they take out from their employees. So all these taxes, we'll find a lot of people get into trouble with these. Income tax, so the general rule is that company debts stay with the company. Income tax in a company is an unsecured debt. Source deductions are what's called a deemed trust. So when you take in money when you charge your suppliers as a business HST on top of your sales price, and you collect that money, that isn't your money. You're merely collecting it on behalf of the government. You're allowed to deduct your income tax on your HST on your expenses, and you pay the government the rest. So that's what's called a deemed trust. And also source deductions. So again, when you take money from your employees out of their payroll, income tax, EI, CPP contributions, you're holding that in trust for the government, And again, that's called the deemed trust, and the government looked at um, as a fairly important debt owed to them, and it's had measures in order to get that back. The other reason we're seeing people now get into trouble is during the pandemic, the government put out what's called a CIBA loan, and they lent businesses money to help them to survive the pandemic. And a lot of businesses didn't pay that back and can't afford to pay it back now. And we're seeing people now with the CIBA loan that need to look at doing perhaps a corporate insolvency or restructuring to help them to get back on track and either continue the business or close the business down. And a lot of times the directors have an important stake in this, because directors can be personally liable for business debts if they've either given a personal guarantee or they're liable due to government legislation. So directors of a corporation are personally liable for source deductions not paid in the business, and for HST not paid in the business. Because again, there's the deemed trust that the government makes them personally liable for. So to a lot of people now, where we're having a dual conversation about the business, first of all, is the business viable? Do you want it to continue? And if that's the case, we'll help them to do that. Or if the business isn't viable, won't continue, we'll look at their personal exposure and help them to close the business down and help them to deal with the debt that they may have from personal guarantees and what's called directors' liability assessments from the Canada Revenue Agency. So lots of conversations, pretty deep conversations when business owners come and see us. But again, it's something they've never dealt with before. They're looking to us to guide them through the process and give them the options available to them.
Thank you, Jeff. And as we come to the end of this, I really want to appreciate you for your time. But I want to ask you a quick question. You are a member of the Entrepreneur Nation in the Burlington chapter, and you have been one of our biggest supporters. I thank you so much for that. You're in your second year of membership. So please tell us why, or let me not say why, how do you find the Entrepreneur Nation working for you?
So Lucy, we in our business, we don't see people twice. Hopefully once we've seen them once, we help them and they go off and be successful. So it's very important for us to be out in the community to find more people we can help. And I've been in lots of networking groups over the years, big ones and small ones. And when I found your Entrepreneur Nation, what I liked about it is that you deal with professionals and professionals only, and like-minded people that I can talk to on a professional level, where they understand what we do. And not only that, they see people in their professions that perhaps need our help. So lots of lawyers obviously belong, people in finance. We're working in the finance field as well, and legal field. So, it's been phenomenal from that respect. And actually, I find it as in my 20 years in Canada, hats off to you. Congratulations. It's been one of the best groups that I've been a member of. And for me, it's been very successful. So I'm a very proud member. Thank you for having me.
Thank you. We're happy to have you, Jeff. And you have actually introduced other insolvency trustees. You have introduced one who is part of the Toronto chapter, and you have introduced one who is part of the Mississauga chapter. So we thank you. That shows that you don't only want to benefit, you want others in your industry to benefit. And I appreciate you so much for that. Thank you again, Jeff, for your time. And we didn't talk a lot about your volunteering and all the things that you do in the community. I think Canada is happy to have you. We'll bring you back so we can talk about your contribution to this country in other ways. And so our viewers, I thank you so much for watching.